Good afternoon, dear colleagues. We're very happy to see you here in the Bank of Russia. We're about to start the press conference by the Governor of Russia, Elvira Nabiullina, and the Deputy Governor, Alexei Zabotkin. And first, we will begin with the Governor's statement following the board meeting today. Good afternoon. Today, we have made the decision to raise the key rate to 13% per annum. The key rate top-ups since July are the response to the materialization of the inflationary risks, including due to the impact of the exchange rate. We have updated our macroeconomic forecast and are relying on it to adjust the level of the key rate needed to achieve the inflation target of 4% by the end of next year. Considering the current conditions, we need to maintain tight monetary policy for a longer period to bring inflation back to the target. I would now dwell on the reasons behind this decision. First, about inflation. In July, current price growth significantly sped up. In August, growth rates edged down, while price pressure was increasingly caused by trend components. Price increases accelerated across a wide range of products. Core inflation indicators continued to move up. Such goods as cars, clothing and footwear, household appliances and electronics were an important contributor to current inflation, as prices for them depend on the exchange rate. The ruble weakening was provoked by several factors simultaneously. I would like to detail them. Foreign currency earnings contracted due to the slump in the value of exports during this year. Concurrently, the demand for imports expanded. This was largely caused by the pro-inflationary pressure of high domestic demand, resulting from expansionary fiscal policy and a considerable acceleration of lending growth. The increase in the demand for imports in Russia amid the reduction in export revenues entailed the depreciation of the ruble. Moreover, as ruble interest rates were not sufficiently high, people's propensity to make ruble savings was quite low, whereas companies were raising ruble loans not to spend foreign currency liquidity. The demand for foreign currency was also boosted through transactions on the financial account, specifically by the companies purchasing Russian assets from foreign owners. This also exerted pressure on the ruble exchange rate. Contrary to popular belief, the currency composition of export payments as such does not put any notable impact on exchange rate movements. Even when exports are paid for in rubles, this normally means that the buyer previously purchased these rubles, that is, it sold the related amount of foreign currency. The only exception is in cases where foreign companies paying for Russian exports in rubles, in the conditions of relatively low interest rates, prefer to raise ruble loans rather than sell foreign currency. Despite the dynamics and high volatility of the exchange rate this year, financial markets were operating as normal, having no problems with liquidity. Therefore, we did not see then and do not see now any financial stability risks. The rapid movement of the exchange rate could not be regarded as such a risk. However, it became an additional factor provoking the increase in inflation and inflation expectations. We raised the key rate exactly to mitigate the impact of these factors. Considering the actual acceleration of price growth, we have revised our inflation forecast for this year upwards to 6 to 7%. The measures we are taking will bring inflation back to the target by the end of next year and stabilize it at this level further on. Secondly, as regards the economy. In the second quarter, GDP rose by 4.9% year-on-year. Such a high growth rate means that the economy is recovering after last year's downturn. Besides, according to our assessments, the part of the economy focusing on domestic demand has generally exceeded the level of late 2021. We expect the expansion to be more moderate in the second half of the year, which is natural after a period of fast recovery growth. The economic growth rate is limited by resource constraints, specifically those related to workforce. The situation in the labor market remains tight, particularly in labor-intensive industries, including metallurgy, machine building, and chemicals. Our regional economy report analyzes the regional labor markets in greater detail. We have kept the GDP growth forecast for this year unchanged at 1.5 to 2.5%, given the positive trends over the first half of 2023 and the expected slowdown in the second half of the year. Besides, we have decreased the upper bound of the forecast for next year and assume the GDP will grow by 0.5 to 1.5%. Further on, the economy will return to a balanced growth rate of 1.5 to 2.5%, according to our estimates. Thirdly, as regards monetary conditions, the financial market has started to adjust to monetary policy tightening. However, this adjustment has not yet influenced price conditions adequately and has had almost no impact on lending dynamics. Our today's decision is aimed at intensifying and accelerating this adjustment, amongst other things. As to the deposit market, households are transferring their funds from current accounts into time deposits. We expect this process to speed up as a result of a further rise in interest rates on ruble deposits. The credit market's response is slower, which is mostly associated with the time lag effect on the transmission. First of all, banks currently continue to issue loans under the earlier approved applications. Second, after the notable increase in the key rate, borrowers are making a last-ditch effort to raise loans now, before banks increase interest rates further. However, in addition to the time lags, there are also factors that are weakening the effect of our decisions. In the first place, these are elevated inflation expectations that are reducing the tightness of monetary conditions. Borrowers compare credit rates with their inflation expectations. Those assuming that high inflation will persist for a long time and their nominal incomes will increase are often ready to raise loans at high interest rates, expecting that inflation will depreciate their debt. Furthermore, extensive subsidized programs, primarily in mortgage lending, support the fast expansion of lending. For the key rate to have the appropriate effect, it should be raised more significantly than if there had been no such programs. Another possible driver of high credit activity is related to expectations by market participants. Some of them expect the same scenarios as in 2014 and 2022, when we switched to monetary policy easing quite quickly. However, the current cycle differs from the previous ones. The considerable key rate increases in the past were largely associated with financial stability risks. When these risks diminished, we lowered the key rate. Now, the situation is totally different. We have raised the key rate due to materialized inflationary risks and will keep it high for a sufficiently long period until it becomes clear that the inflation slowdown is steady enough. I would like to say a few words on the yield curve of federal government bonds. It is the reference point for credit and deposit rates in the entire economy, hence it is an important indicator for us. During periods of disinflation, this curve usually flattens or even becomes inverted. That is, long-term interest rates become lower than short-term ones. This slope of the yield curve indicates tight monetary conditions that have formed and should cause a slowdown in inflation. After the unscheduled key rate increase in our communication, the yield curve of federal government bond has almost flattened. The key rate is directly impacting short-term interest rates. Our today's decision will help increase the slope of the curve through a rise in short-term interest rates. As a result, lending growth rate will reach the level that is coherent with the achievement of the inflation target next year. Now I would like to speak of external conditions. Global economic growth continues to decelerate. More moderate growth rates abroad will limit the rise in prices for Russian exports. Export quantities are increasing more slowly than we assumed in July. Considering the actual data, we have revised our forecast of exports downwards. Nevertheless, taking into account the decision made by OPEC+, we have slightly raised the oil price forecast for this and the next years. The medium-term forecast of oil prices has remained unchanged. The forecast of imports has also been decreased, as we expect imports to adjust to the earlier ruble weakening and more moderate growth rates of domestic demand. As a result, the current account will expand further on compared to the minimum levels of the third quarter of 2023. I will now speak of possible risks to the forecast. The ratio of risks is still shifted towards pro-inflationary ones. A matter of special concern is the possibility that inflation expectations might stay elevated, inducing secondary effects for inflation. Moreover, geopolitical risks persist, just as the probability of a harder landing of the global economy, which might affect the demand for Russian exports and the exchange rate. Another focus of attention is the impact of fiscal policy. Winding up, I would like to comment on monetary policy prospects. According to our baseline scenario, the average key rate during the remainder of this year and in 2024 will equal 13 to 13.6% and 9.6 to 9.7 per annum, respectively. This means that we will keep the key rate at an increased level for a sufficiently long period needed to ensure a steady decrease in inflation and inflation expectations. Our monetary policy is aimed at returning inflation to 4% by the end of next year and stabilizing it at this level further on. Thank you for your attention, and now I'm ready to answer your questions. Dear colleagues, your questions, don't forget to introduce yourselves and identify your agency. Anastasia, please, you have the first one. Anastasia Savilyeva, Interfax Agency. The President of Russia recently noted a very slow repatriation of export revenues by Russian exporters and the intention by some of the Russian companies to place assets abroad, meaning to say that they are trading on the same wire yet again. Do you agree that the exported returning their foreign revenues in a very reserved way? What's the share of these revenue sales based on the recent data? Don't you continue to believe that one should go back to the norm of a compulsory sale of export revenues? And don't you think that the time has come to establish certain written rules, or do you think that it's enough to agree with the exporters verbally? And in continuation of the second, the Minister of Finance stated that there is a discussion going on right now to transform currency control measures, where Minister of Finance is being quite conservative. Now, if Central Bank remains liberal towards this issue, don't you believe that all measures should be suspended apart from the mirror-like ones? And when do you believe you can achieve consensus, and how long this discussion is going to take place? Dear colleagues, just to make a bit things more specific, you started with the main thing, and then you mentioned the matters that are a concern to everybody. In order to save some time, in case anybody has anything more specific to ask about the main topic, please do it now. Ivan, please, go ahead. Ivan Shligin, FOMAG. I think this is an extension of it, just with a slightly different phrasing and an emphasis. The easing of the ruble, the weakening of the ruble that we've seen, has it been brought about by fundamental factors, or one may trace it to either the exporters' behavior or the market speculators? Natalia, please. Natalia Trushina, the Moscow Komsomolets. Could you also please specify the regulator's position overall towards the ruble exchange? Is there any boundary, like, for example, 100 rubles to a dollar, above that or underneath that, when crossing which the central bank will start toughening currency constraints? If so, what kind of a boundary is this, and what are the measures that the Bank of Russia will institute in the first place? Rita, yes, go ahead. Margarita Mordovina, RBK. My question is also about the currency constraints. Andrei Kostin suggested that the repatriation of ruble could be constrained, and if that is if there's something that the Bank of Russia is also looking into. Natalia Zarutska, Ведомости. My more specific questions about the market speculators. Will the central bank be taking measures, or is it having a discussion of instituting mechanisms to combat speculators? All right, the last question, Maria Ilyushina, Kogan. Also, my question is that as of September 14, the Bank of Russia increased currency sales almost tenfold. Why ruble hasn't appreciated because of that? Why ruble hasn't appreciated because of that? Additional measures of currency control and currency restrictions. Yes, indeed, currency restrictions are being currently debated. In many ways, this is the government's authority, and I will describe the central bank's position. You know, if there is a need to impact capital flows, which impact exchange rate, then it should better be done using economic measures rather than administrative measures, because I feel that the administrative control measures should be restricted to mirror-like response measures. So what does economic measures mean? It means to increase the attraction of the ruble savings and offer incentives for companies to sell their revenue to pay for the current expenditures like taxes and wages rather than go for excessive borrowing. Last year, indeed, at the peak of the crisis, we introduced multiple measures. They could have produced a certain result, I mean the currency control measures, but we were introducing them alongside with other measures. And we do acknowledge, and our analysis shows that the basic outcome was related to an expedient response on the part of the monetary policy, very high increase of the interest rates, and that was follow-up supported by the imports and exports. You see, you may remember that the export revenues grew while imports seriously went down. So one should be aware that administrative restrictions, if they are effective, I believe we cannot sufficiently identify their effect from last year because dramatic decisions were also made in other areas. But if you believe them to be ineffective, then this effectiveness lasts for a limited period of time. The longer they are in place, the less effective they are. They can be bypassed. Recall the end of the 90s and the beginning of the 2000s. Now, we are particularly find ourselves in the kind of an environment when companies are obliged to develop different supply chains in the foreign economic activities and payments. Yes, and these supply chains do make it possible to bypass restrictions. But alongside with that, the very same restrictions may create difficulties and obstacles for foreign trade activities, for inability to acquire the needed goods, services, and parts, and so on. At the same time, if we do observe this trend, and we will be trying to close the ever newly appearing loopholes, because one of the questions was to restrict the transfer of rubles abroad. So if every time we attempt to close these loopholes, then these ineffective restrictions are going to turn into an avalanche. We will close things down, then businesses will find a new way to bypass it, and that is going to be an endless game. Administrative expenses for businesses, business inefficiencies, and eventually passing these inefficiencies over on the shoulders of the consumers will only grow. And I will give you an example as to why the standard measures that are currently being debated can be ineffective. Like, for example, to go back to the compulsory sale of the currency revenue. And by the way, a major part of revenues are denominated in rubles, while the currency part of such revenue, the share of its being sold in the market by exporters practically is unchanged. There is a bit of a volatility, but it remains quite high. Now, having sold one's currency earnings, exporters have the opportunity to buy it back in the amounts they need. So as a result, only the FX market turnover will grow, but the balance of supply and demand currency-wide is not going to change simultaneously. That would create this discomfort for companies who need their revenue in order to buy imported goods, additional expenses to convert currencies, but that won't impact sufficiently the exchange rate itself. Now, the second topic, repatriation of currency revenue, transferring currency earnings from a foreign bank into a Russian bank. What does it mean? It doesn't mean that that is the value that the supply of currency in the Russian market will going to grow by that. Because irrespective where you keep your savings, currency savings, be it in a foreign bank or in a Russian bank, it's not going to be in the market. It simply will be kept in the currency account in Russian banks without affecting the exchange rate. And by the way, I was making reference to the analysis. We are elaborately analyzing the current account. You remember last year, we introduced tough restrictions in terms of the compulsory sales of part of the currency earnings. Then we eased it, and we took a look at the capital flows during those periods. So capital flows were not sensitive to the requirements to repatriate and sell export revenues. They were changing not because of that, based on other objective reasons that emerged, the trading balance, uncertainties or certainties, and effectively the suspension of those restrictions, again, didn't affect the objective growth of the volumes of repatriation and export currency sales. But let me go back to the rubles transfers. This is a similar kind of a thing, because transferring rubles into a foreign bank in itself doesn't generate demand for the currency. The demand forms at the point in time when this currency is being purchased. You can impact demand only if you raise the attraction of the ruble as the means to save money. For the exchange rate, it doesn't matter whether the rubles are being converted either from the ruble Russian account or foreign accounts. So what's important are the incentives for these kind of a conversion. Therefore, all right, yes, one should also take into account, like I previously mentioned, the complex logistical chains, because some of the transactions pass through traders. And so if it's economically viable to keep some of the currency amongst the traders for a longer period of time, in terms of the demanding repatriation and compulsory sale, won't resolve it, because that cannot be applied to foreign entities who are outside of the Russian jurisdiction, who don't have any administrative leverage to apply upon them. So only, I feel, economic stimulus can work in this case, adequate lending costs and the indicative things that are being used for taxation purposes, so that possibly through a transfer pricing not to lower the need for the currency to pay for taxes. So let me quote a few stats. Most of the export revenues are denominated in rubles already. Based on the recent data, throughout the whole of the export, 42% is already in rubles. So repatriation of the currency part of the current export earnings is getting smaller. If one is to take a look at our exporters and the residents who hold their currency earnings on foreign accounts, then these volumes practically haven't changed, and they're less than 1% from the total amount of export earnings. So we don't see the traders here in this picture. So about 90% of the currency earnings brought back into the country, companies continue to sell. So the capital outflow, we often hear a question about to what extent capital outflow was a driver behind the exchange rate weakening. We believe this is one of the factors which is not the most meaningful, particularly since the capital outflow this year was very much smaller than last year. So if you take a look at the current account statistics and the financial account without taking into account the reserves, during the 8 months this year, 28.6% billion US dollars. Last year, it was 195.1. Similarly, it goes for the acquisition of the net foreign assets. This year, it's also at a low level. So this does impact the exchange rate, but this impact is very much weaker compared to other factors. Now, yes, and the exchange rate depreciation takes place under the influence of many factors, import and export, and to our mind, specifically, the elevated domestic demand, it forms a stronger ruble-denominated demand for the exports. Now, as far as the psychological boundary for the ruble exchange rate is concerned, we don't identify any because our exchange rate is a floating one, but undoubtedly we take into account the fact that the exchange rate dynamics and its weakening is a pro-inflationary factor, and we responded by raising the key rate to the strengthening of the pro-inflationary factors, amongst which exchange rate had a significant bearing. But not only the exchange rate, but also the speeding of lending activities and so on and so forth. Let me finish with that. I would ask Mr. Zapotkin to continue answering this set of questions. Yeah, thank you very much for your questions. That is basically something that demonstrates that our decision to reallocate the mirror-like transaction of investment into the Federal Endowment Fund is not to change the exchange rate, but just so as during the higher activity related to the demand, related to the payment for the Minister of Finance bonds, we are taking action. As a result, we see that the exchange rate didn't take place, and tomorrow we know that the maturity is going to be taken care of, and there's a certain number of investors who are willing to continue holding to place their monetary resources into hard currency, and would also be willing to buy foreign currencies. So respectively, what we are observing is simply a reallocation in time of our scheduled transactions. Doesn't directly impact the exchange rate, but rather alleviates its fluctuation. Yes, it doesn't alter the overall currency supply, because this means that it's simply just a redistribution in time of the demand for currency. Colleagues, Masha, in the first row, please. TASS Information Agency, Maria Stepanova. My first question is about mortgage market. Do you see any overheating in the mortgage market? And will the government measures, for example, like the contribution, the startup contribution under the subsidized mortgage, may help to cool it down? And my second question, what is the explanation of the change we see in the Russian economic growth threshold, top threshold for next year? Well, about mortgage, yes, indeed, the mortgage market is demonstrating an accelerated growth. If annualized, as of September 1st, that was about 30% growth. Now, this acceleration is because of the subsidized programs, because we do see that the share of subsidized programs overall in the mortgage market is taking place and growing. Another thing that we're concerned by is seeing that riskier groups of customers are getting engaged into this process. For example, over the past 2 years, the issuance of mortgage loans to people with a debt burden which is over 80% of their income has doubled. And we also see that the mortgage with a low initial contribution, 20%, also grew at 62% right now. So we're worried about it. Apart from this keeping a gap between the housing prices and between the primary and the secondary market, like some 40%, this is also the reason to the securitization being tougher with all of the ensuing consequences. And that is why, as of October 1st, we made a decision to establish, to toughen macroprudential markups quite considerably, and institute macroprudential markets at a prohibitive level with regard to the most risky mortgage loans, particularly in as far as the housing under the development process is concerned, so as to stabilize the prices currently existing in the primary market. We expect that the lending structure is going to improve because of that, and we will also see a more balanced landscape for the mortgage growth, which would be appropriate to the income growth and without allowing for the risk of bubbles. So we welcome the decision by the government to slightly toughen its requirements that are placing on the subsidized programs, and also the same would go for the original contribution alongside with the macroprudential markets that we expect a bigger effect from. We will see how effective and impactful it is. If there is a need, we will be ready to additionally tighten the macroprudential markups. Yes, the second question was about the GDP and bringing down the upper threshold. Yes, the forecast for the next year in terms of the GDP rate of growth has been reviewed down to 0.5 to 1.5%, from in between 0.5 to 2.5%. There were two reasons behind this. First of all, a more modest growth of domestic demand against the much tougher monetary policy, so as to help the economy go back to a balanced growth and push inflation back to the 4% target. And the second reason was that we have slightly reviewed downwards the export growth rate to next year in terms of its physical volumes, again considering the data that we see coming and the trends. So that is what we would forecast, and that's what we changed in it. Thank you. Now the next question comes online from Abakan Lea Mizonova, Abakan.ru Internet Portal, please. Good afternoon. You have yet again raised the key rate. Do you believe that the expected effect will compensate the negative effects in the economy, like the unavailability of loans to households and businesses? Well, firstly, as far as loans are concerned, I wouldn't describe them as being unavailable, because the rate of growth of lending shows that it is quite high. And we observe very high rates of lending growth, both to individuals and households, as well as unsecuritized consumer loans, mortgage, and corporate loans. What is important, very important to us, is for the demand that has recovered, not to transform simply into inflationary growth, into prices growing for goods and services that the people are consuming, because otherwise we will see not the economic growth but inflation growth. So it is very important to make timely decisions in order for the economics to grow at a balanced pace. Yes, we have further specified the outlook, but we see that throughout the whole of the outlook period, the economics are going to demonstrate positive growth values. So we are expecting the effect specifically related to not allowing for the inflation speeding up and take inflation to our target, which is 4%, which is crucially important in order for the population to be able to save their purchasing power and their incomes in their savings. Yes, Alexey Borisovich? And again, if one is to take a look at our forecast, yes, indeed, there is a slowdown of the lending growth compared to 2022-2023, because during 2022-2023, indeed, we've witnessed quite a lot of anomalies, particularly throughout 2022, when a big reorganization of the financial system was taking place, like in refinancing the corporate sector. So that was quite obvious that during the paces that we we remember from 2022-23, longer term, the economy is not going to remain at those lending levels. But if you take a look at next year's forecast, the general requirements in terms of the banking system and the economy, we would expect the growth to be at about 5 to 7%, which is higher than the inflation rate for next year. Be it in real terms, the lending in the economy is going to grow, but at a more moderate pace compared to 2022-23. Thank you. Now, dear colleagues, Tatiana Vorona, Frank Media. Elvira Nabiullina, you really said it very correctly that the government has toughened the approach to the subsidized mortgage. We read about it in the press release, but honestly, the analysts are writing that the October measures by the central bank would also have a limited impact on the mortgage market, and henceforth my question, will this market require any quantitative restrictions that you referred to previously, or is it possible to avoid it? And my second quick question, won't you be able to say something about the restrictions placed upon the ruble transfers? Well, I already covered it, but I would say that this measure won't work. It won't be effective. As far as the measures are concerned, in the area of mortgage lending, we've toughened macroprudential measures quite strongly, and we will continue monitoring. If need be, we will carry on. But in the meantime, unfortunately, we are not in a position to apply quantitative limitations. Under the law, we have such a capacity with regard to unsecuritized lending, but not in the case of mortgage. But we believe that principally it would be very useful to have two tools like that, the markups and the quantitative limitations. They work in a slightly different manner, but for the risk mortgage, we don't have it. We can only toughen the markups connected to the level of the original contribution as well as the debt burden of an individual borrower. Thanks. Next question comes online. Dmitry Budin couldn't join us in person here, as usual. From Kommersant, he forwarded a question online. So the question is as follows. Based on the central bank comments over the past 6 months, the economic activity is higher than the one that otherwise would have provided for a stable growth. On the other hand, following the same logic, it is not sufficient in order to ensure the volume of supply which were adequate to the domestic demand. Now, what does central bank think? Will this paradox exhaust itself throughout the year, and in what way? By reducing the business activity or stabilizing the demand? Well, one ought to take into account that the economic capacities in terms of operations, they change in times much slower compared to the economic environment, and the demand fluctuates. So if the demand is ahead of supplies, and this is exactly our case, then the economic adjustment and seeing the economy go back to a balanced and stable growth, and the indication of that specifically is low inflation, which is at par with the target, must pass through a more reserved demand growth specifically. But let me underscore that the overall business activity doesn't have to go down. For some time it will be growing at more moderate pace, because the current growth rate and the demand being stronger than the supply won't be possible without the further acceleration of inflation. And so in the end of the day, we forecast towards the end of the forecast period that the economy will be growing at a balanced growth rate viewed by us at 1.5 to 2.5%. Now, this delayed monetary policy response to the overheated economy, like we see in the cases of other countries, may demand the business activity to be curtailed and even some recession. So it is necessary to timely respond to the inflationary risks in the overheating. Once again, I shall emphasize that our forecast for 2024 envisages positive GDP growth rate. Thank you, colleagues. Elena Fabricne, please. Elena Fabricna, Reuters. Could you please tell us the weakening of the ruble? How many percentage points in your forecast do you allot to it? And second question, what kind of decision options in terms of the rate changes the Board of Directors considered today? Based on our estimates, 10% of the exchange rate weakening will add 0.5, 0.6% to the inflation. Now, the transfer speed and the scale of such a transfer certainly depend upon many factors, like the extent to which this exchange weakening is meaningful, because the accelerated transfer factor, in terms of what we see, is very quick growth in domestic demand, which also create prerequisites for a quicker exchange rate weakening transfer. Now, as far as the key rate decision is concerned, today we have looked into three options: to keep it as is, to consider all the lags. However, we, in an extraordinary way, which was not our core meeting today, we have further specified the outlook because some serious changes have occurred in terms of the exchange rate dynamics and the lending growth rate, which in many ways are higher compared to what we've been forecasting previously, without mentioning the external conditions, and that all points to there being a need for a higher trajectory of the key rate in order to achieve inflation. I mean, this forecast shows that we need to have a higher trajectory for the key rate movement in order to reach inflation of 4% towards the end of next year. So the second option, I mean, the second and the third was raising the rate, and we simply considered different approaches to it, like 12% and higher. But with the discussion of all the pros and contras, we arrive at a consensus opinion to raise it by 1 percentage point. Next question online from Victoria Shirguna, Law and Finance. Please, Victoria. Yes, thank you for the opportunity to ask you a question. You were saying that you were considering either to keep the rate or to raise it by 1 percentage point, but at the same time you are saying that you need to improve the attraction of the ruble savings so as to support the ruble exchange rate. The current key rate, 13%. Do you believe it is sufficiently attractive in order for the household to switch over to savings in rubles? We're going to watch out for it because it all depends upon the way inflationary expectations evolve, because making a decision to save or to spend, people compare rates with their own inflation expectation. You see? Actually, we've got inflation expectations data covering August. It still remains to be seen what will happen in September, but based on the forthcoming week data, we shall see the way the household preferences change in terms of savings. There are already certain indicators available because some of the money flows from the current accounts into the timed accounts, particularly the savings ones. So that is a certain indication of the fact that the key rate decision works. But we need to make sure whether the decisions made are sufficient in order to impact positively the attraction of the ruble-denominated savings. Mr. Zapotkin? Yes, and the key rate is indeed very important, but not least important is the way it transforms itself into the deposit and lending rates by the banks, as well as in the rates that we find in other financial market segments. And so, in this sense, a very important part of today's communication is that we are specifying that we expect that the rate at the current level shall have to remain for a continuous period of time, at least until the point in time when we see a tangible reduction of the current price growth and the lowering of the inflation expectations. And so we count that that will strengthen the transmission of the key rate into the deposit products and the lending rates as well. Dear colleagues, Sergei in the first row, please. Sergei Bolotov, Arguments and Facts. In continuation of the previous question, could you give us a few more details about why the banks are so ambivalent in terms of response to the central bank's measures to raise the cost of money, because in July the maximum deposit rate just grew by 2%. This banking behavior, doesn't it undermine the effectiveness of the central bank's policy? And my second question about the mortgage, if there is an understanding that after the high rate period there's going to be the monetary easing, isn't it time now to introduce the floating rate mortgage principles? What do you think about it? Now, with respect to the speed with which the key rate decisions transfer themselves to the lending and deposit rates, it always happens with a time lag. Now, these time lags are more extensive if, like Mr. Botkin stated, it's just a very short period of time, and so one needs to see and wait whether the central bank will roll the rate, and so you don't have to raise the banking rates, because there was like the situation in 2023, because there was a risk of financial stability when we were lowering the rate. So we specifically are trying to underscore that the current rate increase comes not from these pro-inflationary risks, so that may remain for a longer period of time, and that should strengthen and accelerate this transfer. But at the same time, one should mention that the rates and the pricing conditions, like we said, that has partially reflected itself, but it hasn't, because the banks are raising the rates for deposits, not so extensively like the central bank did about its key rate, but nevertheless that is taking place, and so amongst other things we do acknowledge the transfer of money from current accounts to the time deposits. The lending rates, they respond a bit later, so you have to bear in mind that a considerable share, less than half, but nevertheless a considerable share of the corporate portfolio is already at the floating rates. The translation into the lending rates in their case happens much faster if companies are ready to take the loans at this floating rate. And specifically on the matter of the floating rates, by the way, I believe that the floating rates for household loans are not useful, because floating rates are best to be used in corporate lending and micro business lending, because as far as the micro businesses are concerned, we also believe that maybe the floatings should be restricted within a certain percentage range, because there has to be a professional personnel capable of assessing the interest risks. You see? The loans with the floating rates seem to be attractive at the point in time when you get it, because usually the floating rates offer a lower rate as opposed to a fixed rate case. But people have to take into account that rates may change either way, and eventually a loan may turn out to be more expensive. Yes, we saw the kind of problems that the floating rates created back in 2022. We initiated a special decision in subsidizing and restructuring such loans. So we are of an opinion that as far as the households are concerned, and in mortgage particularly, these floating rates should be treated very accurately. I mean, the banks want to sell their loans at a floating rate, specifically when the rates are at a very low level, and so the banks expect that the probability of them growing is much higher than going down, and so obviously that will redistribute the benefits of the households in favor of the banks. So with respect to the floating rates for the household, we're not welcoming it. I think this is it. Yeah, yes, I'll cover it. Yes, thank you. Now, the next question comes online from Anton Galitsyn, Kommersant newspaper from the city of Yaroslavl. Yes, good afternoon. We are from an industrially developed region, and many businesses are involved in import substitution, yes, naturally using lending, and so a higher key rate will also increase the cost of such lending and will put at risk these plans, and the result, the supply in some of the market segments going down, which may lead to another inflation spiral. So how do you intend to struggle against it? Isn't it not logical to reduce the key rate and create more comfortable environment for economic development via lending? The reduction of the key rate In an environment when there is a high inflation above the target and continues to grow, won't lead to lending costs becoming lower, because the banks give loans at the rates which do not envisage it losing its value because of inflation. So it won't boost the borrowing availability. That would only lead to an additional inflation growth, nothing else. Now, at the same time, for a comfortable development of domestic economy, indeed, it is desirable to have moderate interest rates on the basis of inflation reduction, I should add. And so the lending costs and the deposit rates, as we used to say, in many ways depend upon the household and businesses' expectation towards the future inflation. These could be moderate rate only as long as businesses and households and the banks are sure that inflation is going to be low. And so currently we see the main curtailment in developing industrial production. Our surveys show labor resources, not enough. Just imagine if a business gets a cheap loan and even will buy additional equipment, then there will be a question as to where this business will hire additional people to employ and use the equipment and expand its output, only having lured people from other businesses or industries. But in this case, those others will have to face a declining production. And so the overall effect for the economy is going to be zero change in terms of economic growth. But at the same time, what will happen? Inflation will speed up. Why? Because by stealing people from each other, businesses will have to raise the paycheck. But simply because the overall output in the economy is not growing, then eventually this wage growth will transform itself into the price growth. And I would say that might not be so obvious at a micro level when every company is trying to decide whether it should expand or not expand its business operations, but it definitely works at a macro level, and the restrictions at the macro level are not money, but the physical restrictions as applied to available production tools. And so our task is to ensure moderate rates, that there are moderate rates on the basis of inflation, and so that the lending growth not to create a threat to price stability if it cannot be supported by respective production growth. Thank you. Delia, in the last row, or in the row before the last one, please. Thank you. Delia Rasonsova. Liberian Novosti. Elvira Nabiullina, your today's rhetoric, your personal rhetoric, and of your press release following the results of the Board of Directors meeting, it was quite tough. Amongst other things, you also raised your forecast of the rate towards the end of the year. Does it mean that this year, during the two subsequent board meetings, we might end up seeing further rate increase and no prerequisites neither for the stabilization nor for the monetary policy easing, neither in the end of this year nor in the beginning of next year? Now, do you expect that the ability to achieve the inflation target level will take place towards the end of last year? Thank you. We are offering our forecast covering the key rate trajectory, the annualized one, as well as the kind of a key rate which might manifest itself from today until the end of the year. If you take a look at this outlook, it also envisages the current key rate staying as it is, as well as the possibility for it to be raised. It will all depend upon the data that we would be receiving and the way the economy and the inflationary expectations respond to our decision-making process. Yes, and Mr. Zabotkin as well. Yes, maybe again I shall reiterate that the easing of the monetary policy will be possible only as there is a stable reduction of the current price level and pro rata reduction of the inflation expectations. The next question comes online from Fyodor Ivanov, Invest Future Agency. Hello, Fyodor Ivanov, Invest Future. Today, several times we heard that we're in for a period of tough monetary conditions in the economy. I'm interested to find out whether any measures are being planned to support big and not only big companies who have a very high debt burden. That was my first question. My second question about unemployment. Currently, unemployment is at a record low level, and naturally, it transforms into a pro-inflationary factor, which is high wages. Now, does central bank maintain a certain target level which it may use as a yardstick to say that the unemployment risk is in the past, or you don't? As far as the support for major businesses is concerned, the government enjoys a broad range of programs supporting businesses through subsidization of the interest rates, subsidized lending. So within these programs, I'm sure the government is going to act in order to boost the kind of industries that the government believes to be strategic. Once again, I shall emphasize that our decisions with respect to the key rate are aimed at reducing inflation, and that eventually should lead to more moderate lending rates, particularly as applied to the long-term loans that our businesses require. Now, as far as the companies are concerned that have accumulated high rate, like similar to the households, you see, we're looking at the household whose 80% of income is being spent on servicing their borrowings. That cannot be cured via a new increase of availability of loans. If there's a high debt burden, you need to restructure it together with the lenders. Then there are certain practices when lenders become owners and so on and so forth. But in terms of an additional increase of debt, the situation for businesses who have already been over borrowed, I mean, no matter what rate is underneath, this is the kind of problem which need to be treated using different methods. Now, as far as unemployment is concerned, we don't have any target level for unemployment, but without doubt, the situation in the labor market is one of the most important drivers, particularly now that we take into account when we make up our mind with respect to the key rate. And we do see that the labor demand currently is above its supply. You know, the economists, they use such indicators, or various definitions as an employment equilibrium or the full employment. Usually this is very qualitative because it's very difficult to measure it, because this is the kind of a level of unemployment which conforms to the inflation growing at a target level, at its target level. So in different countries, these could be different levels, but we are in a situation right now when the demand of the labor market is stronger than the supply, and so that has to be taken into account. Dear colleagues, please, Olga, in the third row. Olga Goladze, Pro-Finance. My question comes from the rank-and-file people. The inflation rate 5.5%, but people are worried that prices in the stores are demonstrating approximately 15% growth, and they are always curmudgeoning and writing various posts about the level of inflation, saying that the inflation and prices in the stores live their own lives, which are unrelated. And that applies not only to Russia. That is something you can see all over the world. For example, when in Turkey the inflation is 100%, everything you want to buy is, you see the price of them growing not just 100%, but sometimes 300 and 400%. And now the question that you just told us about it, and so what are we to do? How are we to take this information? Inflation 5% doesn't mean that the goods are going to demonstrate 15% price growth. So how are we to take this information? How are we to digest it? What do people can do about it? Well, indeed, we were talking about inflation expectations and how much of it is in the expectations by the household. And, you know, we do survey people and household and see how households currently see the level of inflations. On a systemic basis, this is certainly higher than the inflation that the Russian Office of Statistics estimates for us. Something like that indeed happens in many countries, but currently the inflation expectations have grown strongly. I mean, and the observed inflation has become stronger as well. So here, undoubtedly, households respond to the price growth, specifically in terms of certain staples like the utility services, like gasoline, so the observed inflation can be substantially different, particularly as far as the staples are concerned, rather than any broad goods where the Office of Statistics sees no regular purchases, but nevertheless that is part of the regular spending. So the only way about it is to reduce the general inflation levels and the overall price growth, and that is how you would make sure that the observed inflation goes down. You know, I'm mentioning it every time, and just telling people that they can count their own inflation because each individual has his or her own consumption basket, and we have a calculator on the central bank's website, and you can use it to see how any particular good product prices have grown. Yes, in as far as what the governor just said, that this problem is less acute in the countries where inflation is lower, and how this can be explained. It can be explained by the fact quite clearly that prices for different goods and services are growing at different rates within a specific period of time. So you and I, like all other people, are such that, of course, we're paying stronger attention to the prices that have grown stronger than others, and we make conclusions about the inflation pace from what we have been able to keep in mind over the past 10-12 months. The higher is the inflation level, the bigger is this spread out in between different prices, so deviation in between the, specifically in case of the products which are becoming more expensive, higher, like what, for example, you mentioned, Turkey, where there is a multiple deviation in terms of the tangible and actual prices from the statistically measured levels. So that particular gap is going to narrow, because we've seen how it has been narrowing during the period when inflation was staying at the low target level, when it was around 4%, and inflation that the household felt was at about 8%. During some months it even was lower. I mean, the gap was 4%. Now this gap is bigger, which can be explained by the fact that the overall price growth rate is stronger. Thank you. The next question comes online from Evgenia Pismina, Bloomberg. The value of the yuan reserve is going down. Isn't the central bank concerned for their safety? Does it have any plans to diversify the reserves into maybe non-friendly currencies, but with a higher, carry value? If you invest your reserves into non-reserve currencies, they cease to be reserves, because these are non-reserve currencies, obviously, even if these are reserve currencies from friendly countries. No, we don't have any plans to diversify the value of yuan compared to US dollars in terms of the reduction of its value. You see, our foreign reserves and gold, precious metals basket was quite diverse, and continuously there were certain currency values fluctuating. This is a continuous process. Now, what is very important to us, the existence of yuan in our reserves makes it possible for us to ensure financial stability whenever it is necessary, because our economics and the trade settlements to a very large extent have been switched to RMBs. And if there is any need for any currency intervention into any FX market, in the past quite a big part of the national economics was denominated in euros and dollars. Now currencies, there is a demand for RMBs, and using RMBs we can deal and handle any situation that the national reserves require. Marina Pimenova, NTV Business News. August 14th was when dollar stepped over the 100% mark, while on August 15th, central bank dramatically raised its key rate. Doesn't mean that this particular level, 100% rubles to a dollar, central bank believes to be a dangerous one. Second question, people have an opinion that if it wasn't for the central bank with its high rate, the economy would have been developing much faster and much more successful, to the envy of the rest of the world nations. What do you think about this critique, and what answer you can offer to such experts? Well, as far as our August 15th decision was concerned, that was a reaction not to there being a certain level achieved, because, as I said, there is no level like that, but 100% rubles to a dollar, people believe that it's psychological. what I would say is that indeed very fast, meaningful changes in the exchange rate happened. Actually, we were aware of the pro-inflationary risk, and that was what we were talking about almost since the beginning of summer, that they can materialize, and so that is what we see is happening. We also believe it was important not to wait until the core board of directors meeting, because that would have allowed for additional heating of inflationary expectations. And we would have had to raise our key rate much higher than what we usually do. I mean, specifically from the point of view to achieve the inflationary target of 4%. Now, with regard to the criticism, I mean, there's always a criticism. What can I say? We can only explain the rationale of what we do, why we're making specific decisions, and what needs to be done in order to achieve a required outcome. We believe that bringing the inflation down is for the benefit of our households and the economy. Artificial reduction of the key rate won't lead to the economic growth. It will simply convert itself into inflation due to the kind of circumstances that we've discussed and a very tense situation in the labor market. So there will be a slower economic growth and high inflation. This is the worst thing that one would otherwise wish to this economy. What we're dealing with is inflation reduction. And this is what we really don't want to wish to this economic development of this country. Thank you. The next question comes online. Alexei Ankudimov, GTRK, Kaliningrad. Good afternoon. The people of the Kaliningrad region are worried by price growth, but usually our inflation rate is higher than the average Russian one. So recently, particularly concerning is the motor fuel price growth. We understand that the Kaliningrad as the region is very much detached, but that might, in terms of what I mentioned, might impact the future inflation. But what kind of way out of it? Is there any favorable expectation that one may put together and look at based on what we're seeing right now? Motor fuels prices is a very important factor, and certainly households do pay a lot of attention, I mean, in the overall price index to the way the fuel prices grow. And in Kaliningrad, this problem is much more stronger because refined products are not being produced there, and so that incurs additional transportation costs supplying the region with it. And so gasoline traditionally is several rubles more expensive compared to other Russian regions. But if we take a look at the price dynamics for fuel in Kaliningrad, it is overall looks like throughout the rest of Russia. For example, during the past 12 months, gasoline in the Kaliningrad region went up about 8.1%, but the average throughout Russia, 7.7% growth. You see, dynamics is almost similar, but the level is different. And of course, the fuel price dynamic concerns not only people living in Kaliningrad, but also in other Russian regions. Fuel prices, they are trying to catch up with the high export prices and the new damper mechanism. You may have heard that the government is already looking into it to find a resolution, and we expect effective decisions to be made. And a couple of more points. If you take a look at the current contribution of the refined products and the fuel prices into the consumer price index, so the deviation of the consumer price index within the 4% based on the August was 1.3 percentage points, somewhere 0.2 percentage points. I mean, 2 percentage points. 0.2 comes from the refined product, which is not really too much. But considering the fact that this is a marker kind of a staple of a product that everybody is able to see, then this step-up trend in terms of the dynamics that we've been observing over the past several months certainly makes a contribution into high inflationary expectations. And so the impact by gasoline prices upon the inflation expectation, I mean the diesel and gasoline, is something that we're definitely going to take into account as well. Dear colleagues, Anna in the last row. If you permit me, I also have two questions. Herman Graf in Vladivostok said that he has a very strong feeling that the rate soon is going to go down, judging by today's decision and the comments that we heard, that this is not coming soon. Only Mr. Zabotkin said that only when the inflation reaches a certain balanced decline. So shouldn't we expect it to happen this year, but next year, maybe in the first half of it? Is it possible to see this inflation going down? And my second question is that we talk a lot about savings, but we also have investments. And there is the same kind of a situation in the stock market like in the general economy when there is a very strong demand that the foreign investors who have left, 80% of them have been substituted by the household. There was also an idea that the President supported and the Strategic Investment Commission supported that the companies who are buying the foreign assets were discounted to place 20% of these assets out in the open market. Are there any more kind of ideas or proposals like that to incentivize domestic companies to go into the capital market rather than to borrow whatever they need from the banks? Well, the first question, like you specifically stated, that there used to be expectations of a fast rate lowering. So what it led to a decelerated transmission of our decisions into practical things. So the faster the transmission of our decisions reflects upon the lending and deposit rates, then the shorter will be the period where the tough conditions are required. But our position is that we will keep it up at that level unless they produce the expected outcome and push inflation down. Mr. Zabotkin, if you would like to add something, please. Yes, yet again, let me make a reference to the outlook. This is the average key rate for next year outlook, 11.5, 12.5%. Both of these values are lower than 13%. So that arithmetically basically shows that if the situation develops within the baseline scenario, this reduction of the rate may take place. But what will be the trajectory of that decline and when it will start will depend upon the way the current price levels evolve. In your second question, you are absolutely correct. We need to develop our capital market, I mean, the way I heard your question phrased, because indeed the dominant funding method is banking loan and the capital market potential is underutilized. There are investors in the capital market. You are absolutely right. There is a demand for investment. So we need to convince the prospective issues to come out into this market. I mean, the bonds are being placed with much higher level of willingness, but in terms of raising funds out of the capital market, not that easygoing. So we see that additional measures need to be put in place, and we have already discussed a whole array of measures with the government for the sake of investors as well as issuers in order to incentivize them towards entering these markets. I understand this is not an easy task to attend to, but let me remind you, there used to be a task to develop the bond market. Do you remember how small it was? So you can't say that one measure is good enough, but there's a whole set of measures which are aimed at one particular outcome, really produced what we were able to see, an active development of the bond market. The same applies to a retail investor. We were talking about the booming growth of retail investors as long as we put the necessary toolkit into the investors' hands. So this is feasible, but not only by applying one measure, but a complex set of measures, and you need to work diligently about and towards this. I mentioned it more than once. In order to raise investments in the capital market, you need to have a different disclosure level, because you may show your reporting to a lender, but in this case, you need to disclose it to a broad range of stakeholders. Many issues are not yet ready to accept it, but without it, the future of this market would be impossible. But for major businesses, by the way, raising money in the capital market can be much more profitable in terms of the costs involved compared to loans, because when we're being told that, they're meeting with the regulators to discuss the adequacy levels, you can go to the stock market, and after that you can undertake certain improvements in terms of the transparency of your reporting, the predictability of your dividend policy, if we're talking about joint stock companies. So there is a huge potential in it, and we intend, together with the government, over the next few years, to really, make it happen. All right, thank you. Next question comes from online. Anna Gromova, Anna Finance Agency. Good afternoon. Thank you very much for the opportunity to ask you a question. I would like you to be a little bit more specific about the cost involved for borrowers in as far as already issued mortgage is concerned, and specifically difference in prices in terms of the life insurance as part of the mortgage package, because it can be 100% different, because the very same mortgage, when insured in different insurance companies, can be twice as more expensive or twice as cheaper. And as a rule, the policy that is being issued as a cover, it is more expensive by the bank subsidiaries, because, it's convenience, because with a banking app in your smartphone, you just click it and you get your coverage for the next year. But the price for that comfort is so high, particularly when a borrower is in the senior age and when the life insurance coverage, because of a number of factors, definitely is going to be more expensive. Not all people understand it, so they have to really pay through the nose. Is there a possibility to stimulate banks to raise the awareness and the low information for the customers? I mean, like the banks would need to say that there are certain advantages if you buy it from us, but at the same time there are other vendors that you can go for, but so that people know everything. I mean, the problem that you have described is indeed there. And the banks who offer mortgage loans, amongst other products, some of them do abuse the lack of awareness on the part of their household so as to offer their insurance product at a higher price compared to what people can buy elsewhere. So I think that the basic measure is to raise the level of awareness on the part of the households that there is such a thing, that the banks cannot refuse if an applicant comes with a coverage issued by a different insurer. So the government made a decision, I think it went into effect as of September 1st, if I'm not mistaken, about the banks sharing the insurance information with the citizens. This information must be made available online if you buy it online, and in the offices where product is being offered. Now, it will be the Federal Anti-Monopoly Service that will monitor this, because the non-compliance is going to be the violation of the anti-monopoly legislation. Hopefully, these measures will produce a positive effect. We will monitor it, because effectively this is like a mis-selling, selling something that is not covered with sufficient information about making it more affordable to an individual. Maxim, in the first row, please. Just a second. Maxim Lenguyenko, Regos. A lot of people look at the digital ruble as a certain financial yoke. There is such a trend where people link the introduction of the digital ruble to the biometric data taken. The household and individual services offices have a big line of people trying to register their non-consent to that. So what is the future of this switch to the digital rubles? Is it going to be creating any comfort or on the contrary? Well, first of all, biometrics and the digital ruble, these are the two projects which are completely unrelated, because their use of the digital ruble doesn't call for any compulsory biometric registration. Both processes, like registering your biometrics and the use of the digital ruble, are absolutely voluntary. This is our principal approach, principal position. An individual must decide for himself about the comfort of making payments, cash, banking cards, online transfers using QR codes. We are creating a choice. We are offering different opportunities. Cash. We continue to develop it. we are about to produce new banknotes with new denomination. The demand for cash is there, and it will remain. And it's just that we see, based on the statistics, that people prefer more comfortable ways of paying for goods and services via mobile payments or cards. It's up to any individual. So principally, it should be a voluntary thing as far as the digital ruble is concerned. And so people are going to make their choice. And what we act upon is that the payment using digital ruble is going to be simpler, more comfortable, and not expensive. So if they want to pay cash or cards, as you wish. Well, dear colleagues, we've overdid our timing, so I can see that there are many hands raised. But let's make it now the last question. Konstantin, in the last row. Thank you. My question is about mortgage. It's Moscow 24 because the Muscovites are concerned with the mortgage market only. So my question is, the central bank wants to cool down this market. We understand the motivation, but the question is, what is in this cooling? Is it bringing down the demand for mortgage or curtailing its issuance or, God forbid, reducing prices for real estate? So what's the quantitative and qualitative measure in it? Well, this is more of a qualitative thing because that means going back to a balanced growth, which doesn't result in risk growing. Sorry for being so theoretical and academic about it, but indeed, it is growing really at a very high pace in the course of several years. That's what we've been observing, which, amongst other things, led to prices being high, like exactly what you referred to in the market. And so we see that the subsidized mortgage also made a contribution into it, because if you go back to the beginning of 2020, when the massive subsidized programs mortgage were prices grew double during this period of time, wages grew 35%, the consumer prices 27%. Essentially, what does it mean? It means that against a seemingly easy availability of mortgage housing is becoming less affordable. Therefore, the demand for mortgage should develop in such a way so as not to end up having such housing, such a growth in the prices for housing. That is also of a disbalanced growth. But, you know, we are taking measures, macroprudential markups, like I said, in order for this to be in the good way. I mean, we've got a large-scale subsidized program, and the decision was made that it will remain until the middle of next year. After that, we believe that only purpose-specific subsidized mortgage programs should remain, the ones that support individual consumers. Colleagues, thank you very much for your strong interest. Thank you.